Welcome to readtheticker.com. Today we're going to talk about setting up analysis chart for options, specifically looking at weekly options. Our references for the subject matter at hand are these sites. The first four links give you an overview of options, option strategies, and how to select between bearish, bullish, and neutral strategies. The last two are well-known option brokers. Obviously, best to ring up your broker and speak to a chap at the other end who can actually help you with your option trading, to carry you through your growth path. Well, let's go to an example. Here we have a blank chart of SPY. It is an analysis chart. See my cursor saying analysis chart? Just going to tidy it up to the way I like to see things. I'll close. Right. Okay, so with the option trading, there are two very important information sources you must be aware of when trading options. The first one is implied volatility. So we're going to activate implied volatility. And if you wish to have historical volatility, you can turn that with volume, option volume. This is total puts and call volume. Make it a bit wide. See? Okay, here's the implied volatility for the SPY. And we're going to, obviously, if you want to throw in line dates or what have you, a bit wider. Option expiration dates. Okay, so this is all pretty standard stuff. You see it in most broker platforms. The expiration dates, implied, and historical volatility. So to buy options, you really want very low implied volatility. To sell options, you want high implied volatility. The links that I've referenced help you explain to which strategies to choose, to which to consider. And obviously you need a lot of volume with the option volumes to make sure that the bid and ask isn't too wide. Anything over 5 cents in a bid and ask is getting a bit risky. Over the information I've got here, I just want to make sure, what it does is it looks back, applied volatility 6-month high. It takes the range, where are we, from say 6 months, 1, 2, 3, 4, 5, 6. Okay. Oops. Over that. T. Put down the T key. Right. Okay, so we've got a range here. What it does is it says here that the range position is 0 because it's right at the bottom of the range within 6 months. And it says the mid is 14.9, which is in the middle, of course. That's about 14.9, you see that? And it says the low is 11.3. So at the moment, implied volatility has collapsed within the 6-month range. The line below says the 12-month high or the 12-month low. So it does exactly the same exercise, but it goes back 12 months. Implied volatility, whether it's high or low, is a critical determination in the strategy you use. Now, another critical determination is how volatile is actual price. Now, if we go to select the price indicator, select make it 37%. I want to select for weekly options. I'm going to select in here. Scroll down. Where we are. Weekly change. Now I'm going to put in a symbol called auto here. What auto does, $auto, it automatically pulls the data for this indicator 1 the price data for the main symbol. So when you put auto in, it automatically will read the data for the main symbol into this calculation. So what this is going to do is show me the weekly price change from Friday to Friday of the SPY. Okay, so as we can hear, this is the point. So we've got 4. So on average, it changes between, as you can see, it's about a 4-point average per week on the SPY, especially so the last 6 months. That's a 4-point average. Now, why is that important? Well, obviously strike price selection. So if you know with weekly options that on average the most extreme you can expect the last 6 months is between Friday and Friday, price to move on average a maximum of 4 points. So when you select your strike prices, if you're doing weekly options and you want to do a condor, or you're doing selling a put or selling calls, and you want to have a high accuracy of wins, you obviously don't want price to close at your strike price. So you want to make sure you select a strike price for your weekly options that is beyond the average price move. So that is the points price move. You can actually go down to the weekly change and select. Next one is turn that into a percentage. So that's now percentages. So on average, it's sort of about 2.5% Friday to Friday. Obviously, if you, the options, weekly options are Thursday to Thursday, I think. So therefore, Friday to Friday is pretty close. And in the end, you really have to look over a period of months. But this is the indicator I use. If we're looking at weekly change, we want weekly change where it's all positive. So weekly change positive. What this does, it takes the negatives. See how it's got negative down here, minus 2% and plus 2%. I want all those negative bars on the upside, so I can actually see the average weekly movement regardless whether it's negative or positive. Right, so then we've got weekly change pos, which basically means negative percentage returns for the week turned upside down. What this does, it gives me an eyeball. I can see for at least 9 months the average change or average maximum change is around 2.5%. So that tells me if I'm going to have I wish to have a high accuracy in selecting strike prices for selling options, I need to select strike prices at least 2.5% away from the price on the Thursday. Right, so two important information is one, are you buying or selling options? Implied volatility tells you when to sell or buy options. Second strategy or important information you've got to have is selection of strike price. So obviously if you want, when you're selling options, you want the close price to be within or not near your strike price. So to have a fair idea what strike price to select, you need to know the expected or even on average move of the price per week. So here we have implied volatility and we have average weekly move. Two very important pieces of information. Most sites out there, they say you got no implied volatility, which is true. They even say look at historical volatility, but it doesn't tell you or doesn't help you with your strike price selection, which is all very critical. Obviously, if you select a strike price within 1% of price and you're doing a condor, well, you've got a pretty good chance of losing money in the last 6 months because price action moves beyond 1% within a week very often. Now that's the basis information for determining a strategy and strike prices for options. Here I've looked at weekly options. Obviously you can turn that into monthly by selecting monthly change data to get a feel of what's going on. I don't have weekly expiration dates. Set the chart pretty crazy. So what I do, I've actually I'll load up my template. Ian's quick trade. In this template, this is my close-up template. I'll load it. yeah, I did select load. Okay, this is my template to review the daily bar. Here's my implied volatility. I don't really want historical volatility. I've got my option volume. I have a standard oscillator, and now down below here, as you can see, I've got my weekly change position, so I can get a feel of what's changing. Now remember, I have that symbol set to auto, so if I go to my swing chart pop out and I load in a different symbol, this started automatically update. Right, so that's my template. So if I go, the template is set for swing chart pop out through my workgroups, my defaults. I'm not going to go do that right now. So I go to my swing. Right, I go to, I want to select option stocks, active weekly options. This is a list of stocks which have volume over 500,000 per day, sorry, and they're known to have active weekly options. Now the data in here on the right has implied volatility and the position of implied volatility, but this is based on monthly. So I'm unable to get weekly implied volatility, but there is a correlation to high monthly implied volatility and high weekly implied volatility, so pretty much this you can use both. So what you can do, you can sort the implied vol to find options that you might wish to sell. Working here. Alright. Obviously purple is highlighting a very high implied vol. We've got our position, which basically means here we've got 85%. That means within the last 6 months, implied vols on the upper range of the last 6 months trend. Another column you should be aware of, RTT rank. That tells you how strong the trend is. Obviously, everyone knows about TSLA. It's got, what we got there, 73% implied volatility. We'll have a look at that, shall we? Okay, open my swing chart pop-up. And within this pop-out, I've got my templates. Now, the first one is template is to analyze steps, and as you can see, Telstra's just exploded higher. I'm going to rush down to my template that I showed you before. So here's my template, my price action. As you can see, TSLA, Telstra Motors, is stepping up very aggressively. I've got very high implied volatility. As you can see, the swings of implied volatility, I think, correlate with earnings announcements. So obviously, you can sell when it's up. And as you can see down here, the average price move per week is pretty much around about, I would say, what is it, about 12%, I would think. I'll put my cursor over it, it's about 14%. So if you're doing a condor, if you're doing a strategy on TSLA on a weekly basis, if you want to get 100% strike rate or near 90% accuracy in selecting options or strategies, you want to know that prices on average moves 14%. So you will select strike prices out of bounds of that 14% move. Obviously, we have a pretty exciting move here, and that doesn't happen very often, thank God. As you can see, that actually the last 1, 2, 3, 4 weeks, price action per week has dropped to 5 or 6%. So you can weigh up whether you want to roll the dice and go have tighter strike prices. This indicator here is called consecutive TSLA. That means what it does it's indicator of 8. So what that basically means, it adds up consecutively 8. How many times 8 bars in a row are higher? For example, this keeps on going up like this when at this point here. It's the first time we had 8 closes in a row. Then it just keeps on going with 8 closes in a row based on 8 SMA until it fails. So obviously you want to, if you're going to be bullish, you'll really want it to be above the black line, above 0. So just to recap, price action, implied volatility tells you to sell or buy. strategies, and the weekly change price average over a period of 6 months or more tells you which strike prices to select when you're selling options. That'll give you a good chance of success with your weekly option strategies. Thanks very much for watching.